What's going on, everybody? So let's go ahead and take a look at some charts. Again, another nasty day in the market here. You know, just when yesterday we thought we had that nice little rebound bounce, today we got rejected and we sold off. So currently sold off on the triple Qs, the Nasdaq 100 underneath the 5 and the 10-day moving average, and currently we are resting right at 20. So we're back to where we were 2, 3, 4 days ago. So here's the thing that I talked a little bit about on my last video touching on the triple Qs. So I talked about, you know, if we can confirm yesterday's price action at high of 400, that we need to be careful around this 401.82 area. That's going to be coming into supply here at the upper channel range here. You know, I was thinking maybe we get into 401.50, 401.80, 402, and then we kind of get rejected if that was going to happen, but we didn't even quite make it. We just kind of, you know, peekabooed above yesterday's highs and then quickly wicked down, and then we just had a nasty downward day of selling. We closed at 393.82, down almost 6 points, percent and a half. So again, a lot of charts, if you scan through a bunch of charts on your watch list, a lot of charts are going to look ugly. A lot more technical damage was done on these charts. They don't look pretty to the long side. So here's the predicament that we're in. Currently, the futures are up 92 handles. You know, that could change between now and pre-market tomorrow. Let's say that the futures continue to just sit here in the green. And we do gap up, or we do open green, where we have stocks that pop off the open. Definitely, you're going to want to be patient. If you're an experienced scalper and you're playing the 1 minute, 2 minute, 5 minute time frame charts, and you have specific levels that you know, and you have great risk management, be my guest and scalp those longs off the open. Here's the problem with that. If you're not an experienced scalper, or you don't really know what you're doing, you can get hurt, because we can open up green, get stuffed into supply, kind of roll over, do this same old song and dance that we did today, and then kind of just slowly fade out. I kind of have a feeling that we're going to go through a little bit of a distribution phase here. So we've been in a tight little range here, besides these 2 days going back to the 19th and the 20th here. If we realistically just go back to the beginning of November around the 4th, we've been in this range between 391 and 401. You know, I have these two trend lines here. You can kind of look at it. 391, 401. We kind of come up, and then we get rejected. We come back down. We break below. We reclaim. We kind of come up, break out. Here we go, going to all-time highs. Nope. We get rejected. We have that news on Friday with the new variant. Nope. Market president, everybody assures us that it's okay. Boom, here Moderna CEO comes out, says that the vaccines are not going to work. Of course they're not going to work, because you want to make new vaccines, you want to make more money. Makes sense. Great marketing, great PR for Moderna. Market kind of sells off in fear again. So here we are again, resting at the 20-day moving average. So we're not really going higher, we're not really going lower. This is what you would call a little bit of a distribution phase here. There's little pockets and little waves. There's bounces that you can catch, and there's shorts that you can catch. But the problem is that moves are not holding a lot of follow through. So normally when you get that confirmation of a pivot, you get that confirmation of a moving average, things tend to just run and everything kind of runs seamless, or vice versa. When you get that breakdown, you get that nice flush and everything kind of just holds its levels. Right now we're getting, you know, pops at the open, and then we're selling off, we're getting flushes, and then we're getting bounces. A very, very hard market to play. Definitely, if you're a swing trader, I would stay out of any swing plays right now. It's just one news headline can completely wreck your swing play, especially if you're playing short-term expiration options contracts. Definitely going to want to stay away from swinging anything. It's a cash flow market only, meaning we need to be on top of our game when it comes to scalping. We need to cut our losses quickly if a move fails, and we need to know when to get out of a trade and take some profits along the way. So here's what I'm really looking for here on the triple Qs. I have a feeling that tomorrow we're going to get a bit of a bounce. So if we do get a bit of a bounce, we have to make sure we have to be watching the triple Qs. If we do come into this 396 and 398 area, what do we do when we get in this area? Do we, you know, hit our heads and bounce around here, kind of go up and then come down and up and down between 398 and 395? Or do we get this flush through 391? I think it would be a lot easier if we just got the flush through 391, lost this 390 area, and kind of came down here to this 385 or 380 area. Kind of just flush everything out. Let's start fresh going into December, going into January, and let's get a push off of this 50-day moving average here and then ramp up into all-time highs. I think that would be the best possible scenario here, but I don't think the market's going to play out that way. Either we're looking for a big flush through 391.85, or I think we're going to continue to bounce around between this 400 and this 394 area for another, until we break out, until we either break out or we break down below. This is how the price action is going to be. So some days it's going to be a green day, and then the next day you're going to think that it's going to continue and it gives it all back. And the next day it's going to flush and you think that things are going to continue to flush, and then we get a bounce. That's just the way it is. Normally this distribution cycle lasts anywhere from a week to 2 weeks, and then it starts to sort itself out. I've been through these before. The main thing is, if you're an options player, you can't really trade every single day. You can't be putting on 5, 6, 7, 10 trades, just because you're going to cut yourself up into little bitty pieces. You're going to win some, you're going to lose some. At the end of the day, you're going to break even, you're going to be slightly negative. You kind of want to wait for the bigger move here. You're going to kind of want to see what the market wants to do. To the short side, 391.85. To the long side, we need to still get over that 401.82 and confirm that area. First things first is we need to reclaim the 5 and the 10-day moving average. We have to see what the price action is going to do for us tomorrow. If we can confirm the 5 or the 10-day moving average, that would be bullish going in, and we could start building up into that 401 area, and then hopefully by the first week of December, we can kind of pop out of here of that 402 range and start testing these all-time highs, and then start turning this 401, 400 area into a level of support going forward, versus having our support be down here at about 390. If we do lose this 391 area, a lot of room to the downside. First area is going to be 391.85. We're going to have room down to 390, and then below 390, realistically looking at around 384. So stay patient. There is some longs that I'm looking at. There's some shorts. I definitely like more shorts than longs, but the way that the market has been going, I got great setups. If we just take a look at one of my setups short, Facebook. Things been getting absolutely hammered here. 1, 2, 3, 4, or one big long day down, kind of bear flagged here. Got initial flush. Anything below 326 or anything below 323 is definitely going to flush this thing lower. We have room down here to the 310s, 312s, 315s. But let's watch what the market does. The way the market's been doing, instead of confirming this move to the downside, what we get is a little peekaboo here. Trap these shorts, and then we kind of rip higher. So if we do bounce, Facebook does have room all the way back up to 334. So the range that Facebook is in right now is this 323 to 334. You got a 10-point range here. That's a lot of risk to be putting on when the market is in between channels here. It's not like we're trading at all-time highs, and it's not like we're continuing to flush down lower. So you just need to be very, very cautious when you're taking these plays. Definitely don't want to put on any swing trades now. Guys, if you like this video, please do me a favor, subscribe to my channel. Drop me a thumbs up, leave me a comment, and join my Discord. That link is down in the description box below, and I will see you guys all tomorrow.